For more on what is happening in the EV space, joining us now is Itay Michaeli, Citi U.S. Autos and Auto Parts Analyst. Itay, it is good to see you. And I wanted to get to a note, Itay, you recently wrote here. You're now trimming your estimates for EV sales, both for this year and next, Itay. Itay, why did you make that call there? What are you seeing in the market?
Well, thank you for having me. Yeah, we did trim our estimates recently by a modest amount. We still see EV sales actually reaching about 9.5% penetration in 2024. It close to 15% by 2025. That said, given the slowdown and some of the revised plans by the automakers that we've seen announced, plus I would say a tough start to January, although December we think was actually a very good month. But just given the slower start in January, we did trim our numbers a little bit. I would say our views are probably still above the current consensus thinking, which has been very bearish on EVs the last few months. We don't completely agree with that. There are some adoption challenges out there that's reflected into our numbers, but we still think we'll have a pretty good year for EV growth this year on the back of some new product.
And who do you think is going to be the big winner in EVs? And is that going to then determine who's the big winner overall in sales this year?
Yes, I mean, overall, EVs are still a small part of the market, but at close to 10%, we think this year. We do believe, of course, Tesla will remain by far the market leader. Our forecast for market share this year is just under 50%. We think a new product, including the refresh on the Model 3, is going to be key for them this year. Of course, Cybertruck ramping as well. And then General Motors, as they ramp their Ultium platform, we think could be in about 11% market share. So sort of the first non-Tesla automaker with a double-digit market share this year as they ramp that platform. We think we need more product in the EV market. If you look at just some of the market coverage to date, it's pretty uneven in certain segments and certainly in certain price points. And one thing to keep in mind in the whole EV debate that's very important is in the U.S. we have on average about 2 vehicles per household. So the burden of EV adoption isn't about changing one's entire lifestyle to go all in on EV initially. It's really about converting households largely to one combustion or ICE and maybe a second one with EV. And if that starts to happen, you could see, in theory, a pretty rapid uptake of EV adoption over the next few years. But you need additional product. Of course, you do need better EV charging infrastructure, lower pricing, which IRA should help to some extent this year as well. So we think structurally the market is probably in better shape than what consensus currently bakes in.
And Itay, you mentioned pricing. Is that, in your opinion, is that the biggest challenge for adoption right now? I ask because if you were in the market, you're looking for an EV, let's say around $35,000, Itay, there aren't that many options. Do you see that changing though?
It certainly is part of it, and in survey work that we've done, it does come up as one of the top 3 reasons and pain points of EV adoption today. But EV charging infrastructure, range anxiety, even product availability also comes up in some of the survey work that we've seen. And what's interesting is some of the lowest priced EVs in the last couple of years have not been the most successful from a volume perspective. And one of the really impressive things that Tesla's accomplished amongst many in the last few years is, when you look at some of the third-party data around conquest, like who are they actually taking share from? There's a fair amount, more than I think people might commonly believe, of that conquest coming from mass market brands. As you actually see, and that's where the appeal of EVs, right? With successful EVs have done some pretty incredible things in terms of market expansion and conquesting from segments that are even lower price. But broadly, to your point, yes, price has to come down over time to increase adoption. That we think 9.5% this year can still be done with some modest degree of a price premium relative to the overall market.
Itay, I guess I would ask my earlier question a little bit differently in terms of the number of vehicles versus the number of vehicles. If I am an investor and I am betting on the long-term viability and growth and eventually maybe dominance of EVs, is Tesla the way to go, or do I actually want to bet on one of the more traditional automakers who maybe have more room to expand there?
Yeah, everything is individual kind of risk reward. Right now with Tesla, we are on the sidelines with a 224 target. Looking for more convincing entry points there, just on valuation. I think you want to look for opportunities where EVs can be very additive and accretive to market share and, of course, longer-term profitability by much more than what consensus bakes in. In GM's case, for example, right, and even Ford's, we have substantial losses, we believe, running through the P&L today. If you can protect key parts of the combustion business, for example, pickup trucks, which we think will see slower EV uptake, then the EV uptake more broadly could end up being actually accretive to the overall earnings over the next couple of years if these companies can execute. And those could be really interesting risk-reward opportunities because you can see some real healthy degree of potential upward earnings revisions as those things play out. So we look for a combination of defensive qualities in companies and, of course, offensive qualities with EV, where you can have a real path to earnings upside and accretion. Of course, Tesla is still by far the market leader. Again, we think about 50% market share this year, and will still be by far the leading share in 2025 by our estimates as well, about 40% share roughly. But right now we are neutral on it, just on valuation and kind of the latest risk-reward assessment.
Yeah, for sure. It's going to be an interesting year in the next couple of years to see how all of that shakes out. Itay, thank you so much. Appreciate it.
Thank you.